Thank you very much for joining us, Chris. Of course, this is your first set of results as the CEO of Goldfields, and I'm just interested how the experience or the change has been for you from managing a platinum miner to a gold miner.
I think the experience is, thanks very much for the question. Good evening to all your listeners. The experience about managing the company has not been that different. I think what's been different is managing in these circumstances. So, everyone locked down with COVID has meant that I've joined the company. I haven't been able to get out to any of the operations other than the ones here in South Africa. So I haven't been able to get to Australia, Ghana, Peru, Chile. And that's been a really interesting time to try get to know the company and not being able to get to see the operations.
So you're seeing them on Google, just like us. But just zooming into your numbers, gold production has increased 2%, with all-in sustaining costs increasing more than that at 11%. But you've still maintained your production guidance for the full year. And I'm just interested in what is driving your confidence that you will still get to those production levels, and what the biggest risks could be for you not reaching those targets.
Yeah, thanks very much. I mean, I think the question about production, we had a 2% increase year on year, but actually we had 5% less production days in this half. So if you think about that, we actually were in a really good position compared to this comparative period last year. And also what we see is we've got a number of operations that are scheduled to have higher production in the second half. And just generally, we have a higher second half anyway. So again, I think we've got really good confidence that the production guidance range is very much within our reach. I think one of the comments around all-in sustaining costs, while they were up by 11%, 7% of that was actually just due to strengthening currencies in Australia. We had the Australian dollar against the US dollar strengthened by 17% year on year, and we had the rand by 12% up. So if you convert that into US dollars, it just makes like the US dollar all-in cost is higher. But actually, our costs on a comparative basis were only up 2%. So I think we've got a very good feeling that the costs are well under control. The production increases are coming. Gold price is still fairly strong. So I think overall, we still look forward to a very solid second half, but we've got really good underlying physical reasons for believing that our costs are still within the guidance, as is our capital, as is our production.
Yeah, and just zooming into that gold price, we have seen in recent months that price really yo-yoing, although it's still relatively high. And I'm just interested in your outlook in the gold price going forward.
You're absolutely right. One of the things about the gold price is it is jumping around all over the place, but notwithstanding that, it's still actually at a really strong level. So 1750 to 1800, 1850, all of those are very solid gold prices. I think it's been driven by the expectation that inflation is still very likely and is likely to continue and likely to increase as governments are trying to spend their way out of the difficulties they have. COVID issues across the world are likely to increase inflation. We're unlikely to see interest rates following suit, as many governments try and keep interest rates low to be able to stimulate the economy. All of that good for the gold price. We're still seeing many governments are still being very cautious around and making sure that they still have some investments in gold. All around, some of the underlying fundamentals of gold are looking pretty good. No oversupply is coming from the producers, and with actually a likelihood over time that production will decline. I think all of those are actually giving us a fair degree of comfort that the gold price will remain strong, but it's likely to still be volatile, that's for sure.
Definitely that gold price is one to watch, because now we are talking about the Fed and potentially tapering starting from as early as October. And actually, I was reading an article earlier on CNBC International with some analysts actually predicting that by the second quarter of 2022, gold will go down below $1,700. But we will definitely be having a discussion about about that with you in your next results. But it's reported that you are looking into acquisitions and over the medium term, and I'm just interested in how much you have in the kitty for that.
Yeah, I mean, you're absolutely right in saying that that's probably over the medium term. We've seen very good growth in goldfields over the last number of years. We still have over the next 3 years increasing growth for goldfields as Salares Norte comes on stream. And we get a little bit more production coming from South Deep. So overall, I think we have an expectation of growing production in goldfields to about 2.7, 2.8 million ounces. And it's at that level we think that we can maintain the group's production, but actually some of the production in the group stops dropping off a little bit after that. And it's that production that we would seek to maintain over the medium term. We've got a bit of time now because we're still growing production to not have to chase assets at the top of the cycle. And we'd be looking either around our existing operations or in the regions in which we operate, either for assets that meet the Goldfield standards or assets that are in, projects that are in the process of being developed. I think those assets are generally cheaper. We've got a bit of time in our hands to be able to chase some of those. And I think the way you've described that is in the medium term, because we've still got lots of growth coming from the projects that are in execution at the moment.
Something we haven't heard about from mining companies in a while, exploration. Any plans for that?
Yeah, we've had very, very solid exploration in, for example, Australia. So all the regions that we operate in, we have not cut back on exploration. What we have cut back on is international greenfields exploration. So we continue to explore in and around our assets. That has proved very, very valuable, for example, in Australia, where when we bought these assets 20 years ago, notwithstanding 20 years worth of production, we've still got the same or more reserves in those areas. And that's because we have been very disciplined about maintaining exploration. We've had very good success at our brownfields exploration, converting at about $60 per ounce in Australia, which is very, very valuable, low cost conversion of resources to reserves. So all around, we've maintained that discipline. What we may start doing now is, I think, just expanding some of our exploration perhaps a bit further afield than we have done over the last 10 years.
We've had a peer of yours on the channel for a number of times, Neil Froneman, CEO of Sibanye-Stillwater, and he has been talking a lot about consolidation in the mining sector, saying that he'd really like it if we had a South African mining champion. Your views on consolidation in the mining sector?
Yeah, I mean, I clearly can't speak for someone else's companies and for the ideas they come up with, but we have seen consolidation in the gold sector internationally over the last 3 years. Our expectation is you're likely still to see some more of that. I think our shareholders are very happy with the progress that Gold Fields has made over the last number of years. And the best way for us to look after our shareholders is to continue delivering on the things we're doing. There's still extra value to be created out of South Deep. When Salares Norte comes on stream, you definitely will see the value of the company pick up. We've still got some extra value that we see in Australia that the market's not yet seeing. So all round, I think we continue to do what we think is right for the company. Our shareholders have been very happy with that. We haven't heard our shareholders saying to us, hey, we want you to join with somebody else, or we think it's a good idea to do A, B, or C. So I think all round, we can't comment for someone else. We know what we need to do. We are growing this company. The shareholders have been very happy with the growth of this company, and we have certainly seen a re-rating of Gold Fields much closer to our international peers. And we believe that very soon we'll be able to outperform them with the work that we're doing in the company, and that's actually what shareholders want from us.